14 Very important facts about reverse mortgage. Many individuals know about graduated home buyback credit alternatives because of the continuous promoting efforts and VIP supports of these items. Be that as it may, do you know your graduated house buyback actualities? With the greater part of the buzz about retirement financing choices today, it can be hard to recognize finished and deficient data about the graduated house buyback items accessible. Is it true that they are sheltered? How does the administration fit in? It is safe to say that they are for low-wage families, as it were. Your house is valuable. Get the actualities about home buybacks. Here are 14 turnaround home loan truths important in case you're contemplating taking this sort of advance for your retirement years. Reality: reverse home loans are utilized by a wide range of individuals for a wide range of reasons. Home buybacks are not for a specific pay level or family unit sort. The essential borrower must be 62 years of age, and should have enough home value to qualify. There will likewise be a money-related evaluation to verify that the borrower is fit to maintain the necessities of the advance. Be that as it may, home buybacks can and have been utilized by a wide range of sorts of families, from high total assets couples and people who are riding out market swings that are affecting their different speculations, to families that do require extra month-to-month income to help bring home the bacon. There's nobody motivation to take a graduated home buyback, and there's nobody individual for whom the credit is the right choice. Actuality: you possess the home when you have a graduated house buyback. Many individuals incorrectly trust that the bank or the administration takes your home when you get a home buyback. That is basically not genuine. Invert contract borrowers hold the title to their homes all through the whole course of the advance. Once the credit winds up plainly due and payable because of an occasion, for example, the borrower passing endlessly or moving, the borrower or his or her beneficiaries will be in charge of reimbursing the advance. Regularly, this is done through offer of the home, and you never owe more than the estimation of the home when the credit comes due. Certainty: your beneficiaries have choices. Despite the fact that it's regularly the case that beneficiaries pitch the home to reimburse the credit, that is not their exclusive alternative. For the situation where borrower has passed away, beneficiaries are qualified for pay off the house buyback through whatever methods they pick. On the off chance that they are capable and wish to reimburse the advance with outside assets and keep the house, that is dependent upon them to choose. Take in more in, what happens when a reverse mortgage comes due. Moreover, take note of that expiration shows that most families would preferably get a house buyback than lose autonomy or trade off their personal satisfaction. Actuality: it's probably going to diminish your total assets. A home buyback is an advance that permits a borrower to take from the home value he or she has amassed after some time. When this cash is spent, the home holds less esteem. There is additionally intrigues that collections should be reimbursed when the credit comes due. Along these lines, a graduated home buyback is probably going to diminish your total assets. Be that as it may, in the event that you get a graduated home buyback yet don't utilize the advance continues and just keep them in a credit extension, it is conceivable that a graduated home buyback could enhance your total assets. Certainty: the advances are developing in notoriety. 3 patterns are making house buybacks more well-known than any other time in recent memory. 1. Americans have not spared enough. 2. Housing qualities are at record-breaking highs. 3. The reverse mortgage has had numerous current adjustments to make it more a secure item for seniors. Truth: timing when to get a home buyback can mean more cash for you. At the point when there are low loan costs and high lodging costs, it can be a decent time to get a house buyback. Nonetheless, the choice to get a graduated home buyback ought to be a piece of your long-lasting budgetary arrangement and not be done spontaneously. Actuality: reverse home loan TV promotions are befuddling. A current review by the Consumer Financial Protection Bureau found that most home buyback TV promotions are deceiving or befuddling. Graduated home buybacks are fairly entangled, and it is critical to comprehend truth versus fiction. Here are the truths behind the advertisements. Reality: a graduated house buyback is less fiscally productive than scaling back. Drawing on your home value is one alternative to free up home value in retirement, yet scaling back is another mainstream decision. By pitching your home and migrating to a littler property, you may see more budgetary efficiency than if you somehow happen to take out a graduated home buyback on your current home. Be that as it may, if remaining in your present home is your objective, a graduated home buyback might be a choice worth considering. Actuality: there are diverse installment alternatives for your graduated house buyback. A great many people know about the single amount choice for accepting graduated house buyback continues. Truth be told, the singular amount turnaround home loan has lost prominence lately because of changes to the administration guaranteed home equity conversion mortgage program. Today's borrowers are all the more regularly taking their home buybacks as credit lines, or under term or residency installment arrangements. Truth: there are forthright expenses on a home buyback. Like any home advance, borrowers confront forthright expenses including a home loan protection premium, a beginning charge paid to the advance originator, evaluation charges, advising charges, and extra shutting costs, for example, title and legal official charges. The start charge for HECM credits is topped. However, it's a smart thought to ask what these potential expenses are probably going to add up to ahead of time of paying them. Actuality: most graduated house buybacks, not all, accompany an administration insure. Most by far of graduated house buybacks are taken out as HECM advances under the administration protected program. There are likewise private home buybacks accessible through moneylenders that may offer some extra advantages to borrowers, for example, the capacity to obtain a more elevated amount of home value. Approach a graduated house buyback authority for points of interest. Truth: home value is the greatest wellspring of riches for half of Americans. A current report distributed by the Brookings Institution referring to a 2014 Federal Reserve finding that home value is a critical wellspring of riches for center-wage family units, representing more than 33% of aggregate total assets for the second, third, and fourth quintiles of the total assets dissemination. Home value might be your greatest resource, and in this manner, your most reasonable choice for financing your retirement. A graduated house buyback is one approach to take advantage of this home value. Reality: there's more than one sort of house buyback. Graduated house buybacks are not restricted to the HECM sort, nor are they entirely credits used to stay in the home you at present possess. On the off chance that you are hoping to get a graduated home buyback and buy another home all in a solitary exchange, contact a house buyback expert to take in more about the HECM for Purchase program. Much the same as there are diverse issues confronting numerous family units, there are distinctive graduated home buyback sorts to help illuminate them. Reality: there is no correct choice. Getting a graduated home buyback is not for everybody. Like most things, the choice to get a house buyback, or not, is altogether subjective. There are a wide range of individual elements to consider. In the event that you are uncertain whether the credit is ideal for you, you should think about utilizing the home buyback reasonableness test and adapting more about appropriateness. Company web, quotes on car, insurance industry, mortgage affordability calculator, computer hardware, Google Play developer console.